that Bank of Uganda has now allowed commercial banks to issue dividends to shareholders should have showed that things are okay. But the party is now being spoiled by the high commodity prices, which are predicted to affect how banks can lend going forward.
Going forward, we anticipate that non-performing loans are going to increase. Why? Because as I pointed out at the start, the economy is not doing well. This is obvious. In the first instance, as the monetary policy tightening continues, households and enterprises may face challenges in repaying their loans, and this could increase credit risk. And we are saying this will happen if monetary policy tightening does what? Continues. We have not yet reached that point. Most people can absorb an increase from 6.5 to 7.5.
In other words, commercial banks are now going to be more cautious in lending to you, and if you have a loan with a bank, prepare to pay higher interest rates, even while the economic environment remains tough.
So what have we done? We continue to engage banks to ensure that they set aside provisions in a forward-looking manner. Bank of Uganda implemented IFRS 9, which is an international accounting standard, where banks set aside provisions, not just for loans which are already going bad, but also set aside provisions in a forward-looking manner if they anticipate that a borrower may default in future, even though he's still what? Performing.
So, the current high prices of commodities is not only about your food and fuel. For those of you who deal with banks, especially for credit, things will likely get worse before they get better. Rachel Nabisubi, NTV Business.